Let's begin with the day's market action.
You're watching Markets Today.
Market is looking, it is really energetic.
500 points gained by Sensex. Houses have turned optimistic.
The market after the first 2 hours of
Texture
volatility
is clearly buy on dips.
Nifty inching up more than 100
Bulls did
points.
manage to maintain the winning momentum.
18,400 has become a bit of a hurdle for the market.
Are under a lot of pressure.
Breathtaking resilience is what the bulls
In
displayed.
an unprecedented surge, Nifty has hit a record high of 26,277 points.
It's 9:15 a.m. as the sun rises over Mumbai and the heart of India's financial engine comes alive. The National Stock Exchange of India springs to life, igniting a symphony of transactions and dreams. In this bustling metropolis, where skyscrapers touch the sky and fortunes are made in microseconds, the NSE stands as a towering symbol of economic prowess. $5.6 trillion worth of equity has been traded, and every day up to $100 billion worth of transactions happen.
When it started in 94, I was like 26 years old. I was just 1 year into the job in IDBI, and I was an engineer, an MBA in finance. There was a perception that this boy of 24, 25 knows computers. Dr. Patil, who was the MD of NSE then, he called me up saying, now you are in charge of equities market. Because you are a Gujarati and you're also an engineer, so you run the technology, but you now you will be running the equities market also. In India, we wanted to create a completely automated exchange where you place the orders and matches the orders automatically. Literally, the stock markets have reached entire India largely on the basis of the technology, the transparency, but more importantly, the trust that has come up. People sitting in Dibrugarh, Jorhat, Srinagar, remotest corner of Jammu Kashmir are now investing in India's stock market. If you take India's total zip codes or pin codes, only probably less than 30 pin codes don't have any investor staying there, but most of them are actually airports where nobody stays even otherwise.
NSE was really assumed to be created to remove the ills of the existing stock exchanges. The big thing about NSE was that it's national and it's electronic. Because it's electronic, you can actually have people staying elsewhere outside Mumbai and still trading on it.
The equity market story was linked to Gujarat and was linked to Maharashtra, and suddenly it is much more broad-based. You've got people from all parts of the country getting involved with the stock markets, investing in the stock markets, and I think that has been a big change.
The start of NSE as the new wave of stock exchanges was a very significant symbol of the financial sector reform of India.
NSE is a very reliable platform. I think the technology infrastructure that they've built allows for both companies and investors to trade very seamlessly. And that just makes life easy, of course.
But what is the history behind the world-class exchange that has over 5.6 trillion market cap?
In early 90s or at the time when NSE was being set up, financially, the world has just emerged from the war between Iraq and US, which was something 88, 89. So Gulf War and all that, it was emerging after that. So crude oil price crashed and it was $10 per barrel and those things were big worrisome issues.
Soviet bloc collapse, the failure of socialistic planned economies, which India had followed, became evident. Second, financial market reforms unfolded in capitalistic economies.
Indian political scenario was unstable. Prior to 1991 government, there were 3-4 prime ministers came in less than 2 years' time. India had to mortgage gold to raise money to pay IMF.
India's foreign economic crisis in 1991 gave the Indian government and people a big wake-up call. India needed to upgrade its financial system.
Mr. Narasimha Rao was the Prime Minister and Dr. Manmohan Singh was the Finance Minister. They were very keen that you need to have an automated action.
We must remember that till about 1980, Indian economy was growing very slowly. It was called the Hindu rate of growth at just at 3.5%. After the 80s, there was a bit of liberalization and we started growing at 5 to 6%. So the investable surplus and therefore people interested in the stock market started expanding.
This ambitious venture had humble beginnings under a Mumbai banyan tree. Founded with just 22 brokers in 1875.
Around 1860s, the action on the western side, that's the Bombay, started, and a native share and stockbroker association was finally formed in 1875 on 9th of July, which now we know as Bombay Stock Exchange.
It was in the form of AOP. AOP means Association of Persons. So some persons gathered and they have decided that we will deal in the stock markets. And mainly Gujaratis and Parsis were there.
By 1991, we had like 22 exchanges in India.
We had number of exchanges in different parts and cities of the country. Those exchanges were regional, local. Companies were getting listed only in the nearby exchanges. And not to blame anybody for this, this was the practice in other parts of the world. For jute and coal, there was something in Calcutta, and for cotton, it was in Bombay and Ahmedabad and things like that.
But all were like this physical mode. Nobody were computerized.
We had just about started doing our kind of a career. 87, we opened the shop and we became sub-broker, and it was absolutely primitive system. And actually it was a nice thing to learn the way actually physical stock market works. And even books were not there at that point of time. But what I read, I think it matched what was there in US maybe in 50s or 60s, you know. It was a physical stock market, so we could learn a lot. We could see how market making happens, how stock price is determined physically. I used to go from pit to pit, and you know, I would go to wherever there is a crowd. So there will be some massive announcement about bonus or result or something, and because of that, the whole market wants to buy and sell in that particular thing. So all kinds of sign languages will be used for buying or selling and quantity, and there'll be as if people are fighting with each other, but actually they are not fighting. They are kind of just doing transaction, and there'll be a lot of heated discussion. The guys will be excited. Trading was physical. You had to actually go and write Sauda, both sides in the ring. You had to write Sauda transactions physically, and you had to settle physically because the paper, it was all paper. There was a transfer deed, there was a share certificate.
Lot of issues were there at that time. First is the physical shares, because shares were in the physical form, in a paper form. So there are always chances to कि भाई जल जाता है शेयर, गुम हो जाता है, चोरी हो जाता है, फट जाता है.
The another associated problem with the physical shares were that when you want to sell and I want to buy, you have to deliver the shares with a transfer deed. So share certificate and transfer deed. And transfer deed will have seller's detail and buyer's detail to be transferred to. So in that the seller has to sign what is registered with the company. Now the seller could be 80 years old guy or 50-year-old guy and he must have forgotten his signature or must have changed. So now when you present it for the transfer, the damn thing used to come back saying that signature not tallied, so bad delivery.
You buy a share and it's not often in the name of the person from whom you're buying. Because it isn't somebody's name, it doesn't matter. You and I can buy and it can become mine. But if you sent it to the company for change of name, they could say that the signature of the previous guy is not matching. So this signature mismatch and therefore bad delivery was very common.
Before digitization, the Indian stock market settlements were manual, taking up to 50 days with paperwork and physical share transfers causing delays and inefficiencies.
Because of the physical papers, there were a lot of issues related to things. Means shares reaching to the persons, it was taking time in settlement.
Stock markets were once dominated by an old boys club, where brokers shouted complex terms in local languages, keeping market access tightly controlled and outsiders at bay.
Many of them were mutual organizations, like BSE, owned by and managed by member stock brokers.
Brokers lobby were the decision makers for the exchange. There used to be executive director for execution. They used to have privileged information. They used to make full use of it for insider trading. And everybody knew about it because there was no regulator. Only a small division in finance ministry which doesn't had anything to regulate.
We had serious problems in that system when there was no guarantee that a trade would be settled. And in fact, repeated cycles of a carry forward were taking place. Here in this market, even a small second gap in price dissemination can lead to change in prices.
The brokers were powerful. Many of them actually spoke in the local language. So very difficult for an outside administrator, say an IAS officer, to even understand and make rules.
Apart from the ongoing schemes like transfer form, duplicate shares and this non-transparency with investors and no protection to investors, sub-brokers were not recognized. They were doing all business on behalf of investors and brokers. If they make some mistake, if they lose, there was nobody to protect.
And then came the infamous Harshad Mehta scam, which wiped out $475 million of investors' money overnight.
I was actually a member of the committee which made the investigation. They used what was known as the portfolio management scheme, whereby the banks gave authority to them to manage their portfolio on the basis of a guaranteed return. Therefore, they would take the money and then use that money to trade on their own account and then give a guaranteed return so that if they, for example, earned 18% and they had to pay a guaranteed return of 15%, there had to be some way in which they could get that additional 3%. So what was then done was you got artificial transactions.
Investors lost heavily. Brokers lost heavily. Those who were raising money using their shares as a mortgage lost heavily. Ferwani committee was set up for reforms. Ferwani committee recommendation, among other things, setting up of a national stock exchange, running on a technology platform, having a nationwide jurisdiction.
Why did this committee was set up? It was because of the hegemony of the Bombay Stock Exchange and its brokers who refused to accept any kind of reforms or discipline. Government was working, that is fundamental change in 90s, whole 90s is continued to happen, and to match the requirements of such an economy, we wanted a corresponding securities market.
Fairvani committee recommended that you need to have a model exchange which will ensure that other exchanges learn from that and things like that. But broadly, it was an outcome of the Harshad Mehta scandal. And the new government, where Mr. Narasimha Rao was the Prime Minister and Dr. Manmohan Singh was the Finance Minister, they were very keen that you need to have an automated action.
It was a state-led policy decision that led to the emergence of a new stock exchange with a new paradigm, with a new governance structure, where the brokers had no role in the running of the exchange. Completely tech-driven system has to be provided so that the manual process is completely avoided and the system is completely driven by trust. So the NSE was a major policy experiment made by the government of India at that time.
The owners of the stock exchange were the ones who traded. So how do you introduce trading members who are different from the owners? All these problems were there. And for this, a Fairvani committee was set up. Mr. Fairvani was the head of UTI, Unit Trust of India, for a good 10 years. So the Fairvani committee was really the father of the NSE, so to speak.
Following the Fairvani committee's recommendations, the IDBI was entrusted with establishing the National Stock Exchange, marking another milestone in its history of creating successful ventures.
IDBI was told to set up NSE because IDBI was literally the largest institution India had. It was set up under IDBI Act in 1976. It was a division of RBI before, and then it was set up, and it had actually been a mother of many other institutions, like SEBI was set up under IDBI's scheme only, and similarly Exim Bank or SIDBI and many other institutions. IDBI was like a parent to them.
Mr. Nadkarni was the chairman of IDBI. He asked R.H. Patil to go ahead and, set up the National Stock Exchange. One of the things that therefore visualized is that it should be electronically run. Now here I must give credit to the person who visualized it. It was Dr. R.H. Patil, who was an employee of IDBI.
Dr. Patel was a visionary. He recruited many technologically minded young professionals from outside the stock market industry. He took advantage of India's exceptional richness in IT talents.
If I remember the names right, Raghavan Putran, Ravi Narayan and Ashish Chauhan. These were the right people who came from IDBI to set up NSE.
I still remember my first conversation with National Stock Exchange, and Dr. Patil had this small room. I was amazed by the vision they had. And I was amazed by the fact that they did not have a single doubt in their mind that this will work. You must understand that we were attempting to do something which had not been done across the world any time.
We were learning as we went along. Dr. Patil was concerned, he was giving the concepts. He had the vision. We were very clear about what we wanted to achieve. We wanted to have an electronic-based stock exchange. And that was quite different from the traditional stock exchange like the Bombay Stock Exchange.
The NSE ushered in an era of automated screen-based trading. One no longer heard a cacophony of shouts and hand gestures, only saw the transparent transactions of share trades taking place.
This is the first time we enabled investors to discover their own price. So So that is where we realized that as a broker, we were missing lots of opportunities in terms of we can't change the trade during the market hours. Your client on themselves can change their order, they can execute their order, they can see the movement of the market. And that was really a revolutionary phase kind of a thing for this industry.
The thing that struck me about NSE was its transparency, the culture of transparency that it brought in, and the accessibility and the willingness to explain new concepts that were being introduced in the Indian capital market for the very first time. This came like a breath of fresh air.
It is when a company lists, it has to be listed on an exchange. Online system was not in existence and paper shares were issued, and that were the problem. But now all those things with the documentation has to be filed on the exchange platform. And if there is any questions are to be asked, people can ask that question, people can inform to the exchange and also simultaneously the regulator. And so that brought in more clarity.
NSE is the frontline regulator, and also that provides dispute resolution. It also provides transaction processing, which is buying, selling and stuff. But our main job is regulations, regulating our brokers and our companies.
For the first time, a national level trading system could be started. People from various parts of the country, through VSAT, they could log on to the system. They had very good price discovery. There was transparency in declaration of the price.
The satellite link, which is very important, integrated brokers, investors in remote cities, towns across India into a single national stock market.
Most importantly, it was a connectivity. So till the last day, the VSATs, we got permissions almost, at the end of it all. So it was kind of, a lot of things being put together. The investors, how do you get orders from the investors, So brokers had to be contacting the investors who were to put in all this. So the last week prior to the launch, reinforcement of a lot of these things, mock testing, this, that. So I think a lot of these things went into, because you're going to start off, after that there's no looking back. So it was a lot of excitement in terms of the launch.
NSE was not going by the conventional wisdom that the US systems will be good or the UK system will be good. They explored most of the trading systems in the world at that time, and they chose that one which was the best suitable for the Indian conditions.
We thought the closest after a global search was a specialized machine status, looking at the cost and the applicability of the software which is called TCAM. The software company itself, TCAM, was a New York-based company, and they had installed it in some of the exchanges, but Turkey was the first one they went live with. That's how we went to Turkey to see it, to operate on a machine which we wanted to buy, and also the ability to maintain that software after it was customized to the local conditions. So all of these came into the play.
After all the research and planning, the NSE introduced NEAT, or the National Exchange for Automated Trading, in 1994. NEAT automates order, matching execution and settlement processes. It ensures efficient transactions, transparency and user-friendly interface for market participants.
The software's name called NEAT, that is NSE's Electronic Automated Trading. That NEAT terminal is different from the NEAT system at the server end, where we match the trading. We basically created the line-based framework, and then you press, say, F1 it is buy, F2 is sell, F5 would be market by price and all, and it will open up a small window to give you top 5 buys, top 5 sell. It was a very simple, easy to use. It won't give you too many windows opening up in different corners, and broadly people got used to it. Once they get used to it, they think this is the best.
For all the features for the users, it was put in very nicely. The NSE
did create that founding platform. So there are a lot of the original UI which they created in '94 was so much good. The user interface, now that time we never used the word user interface, now we have said UI experience, but actually the UI experience of NSE was fantastic.
Continuously, people's interest increases. Investors' numbers are increasing. So turnover is also increasing. Because of automation, so many benefits are there, mainly the transparency. Transparency gives the trust.
Technology has brought not only transparency to the investor, but also at the back end remove a lot of the risks which are there. And SEBI has also been pushing NSE and all the other MIIs to higher standards in terms of how to use technology to make the system work better.
But there was another thing that was happening at that time with the finance ministry and Dr. R.H. Patil as well, that is dematerializing the shares. That's a very big, contribution. There was something called the Depositories Ordinance. So this Depositories Ordinance actually ensured that shares are stored in a central place.
But attachment of the physical shares, I am the owner. It should be in my cupboard. It should be in my bank locker. It should be in my tijori, right? तो भाई शेयर ले लेंगे तो फिर मेरा क्या होगा? How I can prove myself that I have the owner of the this much shares? Lot of worries were there. At that time, lot of awareness was created about demat and depository, how it's safeguard. And today, nobody is allowed for a single share in a physical form in the system.
We thought it will take at least 10 years to dematerialize all the shares. We did it in 2 or 3 years, which again is a record for with the kind of shareholders we have in this market. So I think everything we have shown to the world that it's possible, nothing is impossible.
Actually, real growth of the stock market started the moment papers went out of system. Apart from the speed of settlement, accuracy of settlement, it also brought down the cost for the investor. So it was all over complete revolution in terms of investing in the stock market.
With this dematerialization and electronic trading, what happened was we opened these gates for anybody who wants to invest in Indian economic story and want to invest in any company which is listed on exchanges.
In demat, it has become so simple like our UPI today. In a second, you can transfer money. Even other USA don't have such facility. Our economy is called fastest growing economy. In demat, we can say the fastest growing dematerialization process in India. Everything is demat now. Gold is demat, silver is demat, commodities are demat.
Dematerialization has transformed trading, making it more accessible and efficient. This evolution in trading practices has continued to shape the market, with key stock market indices like Nifty and Bank Nifty playing a crucial role in helping investors track market performance and make informed decisions.
NSE started November 394 equities. Then there was a demand that NSE needs to have their own index like BSE at Sensex. And Sensex had become popular. So by November, I think November 24 or something, we had got a 100 share index called NSE 100. So within 15-20 days, we had already created an index and started. We did a lot of calculations. Then I said we need to have either 50 or 100. That's why we made NSE 50. And then while typing, the programmer started typing easily saying NFTY. So that's how it started being called Nifty. It's a 50 share index, NSE 50. That name is catchy. People have accepted it. It's not easy to change it. We will keep on calling it NSE 50. People will call it Nifty. When you take an index, it's basically a arithmetic average of few companies. Like in Nifty 50, there are 50 companies. And it is market capitalization weighted. Nifty trading started in 2000, and just before that, Singapore had started trading in Nifty. So foreigners also were using basically Nifty as a proxy for India to sort of invest into India.
NSE Nifty 50 had really become a global benchmark index. And indices is about getting the top stocks into that. It kind of reflects the growth momentum of a country. Mutual funds or others came in, like you had 6,000, 7,000 listed stock. How do you pick up stocks as an individual? And that's where the professionals at the mutual fund will help you add the stocks. But then how do you compare whether that mutual fund has given right kind of return or not, right? So therefore that you compare with the indices. But Nifty 50 is the benchmark which you kind of compare your returns with.
The NSE's technological revolution broke monopolies, boosted transparency, and cut settlement times.
The brokers actually gave us so many inputs. We should be really thankful. The kind of inputs they gave, including system requirements. We would download a report, they would say, look, I think this is more useful for us. And how it will easily tie in with their back offices. So it's a kind of a learning. So feedback was very important. These were some of the things which were ingrained in us.
The SEBI chief telling us at our event that when she was sitting across other global regulators and they were talking about how India's been able to cut down its settlement cycle so significantly, they were all in awe as to how this had happened and how quickly it had happened.
Since 1994, India's market cap has soared almost 120 times, from $4.7 billion to $5.6 trillion by 2024.
As the economy grew, and after 90s, we are growing at like 5.5%, 6%. The economy has really taken off. A lot of liberalization has happened. Licensing Act has gone off. Tariffs are brought down from 150 to 100% to 20-30%. So lots of imports are happening. Multinationals are investing in India. So, there is a lot of share trading activity.
You imagine the revolution which is on. Today, we are talking about 158 million demat accounts. So there must be at least 10 to 12 crore guys and users who are in the market and growing at about 30-40% per year. The real impact is the economy. Now today we are trading, that time in 2002-03 we were trading half times GDP. So GDP was 200 billion, maybe our market cap was 100 billion or maybe even lower than that. Today my GDP is 4 trillion. My market cap is over 5 trillion. So it is 135% of the GDP. So now what is happening is a lot of equity money, which is risk money from all our people with 100,000 rupees or 50,000, 30,000, 3,000, 1,000. That money is pouring in here. And this money is going to the entrepreneurs slowly.
Several things are happening. Many companies are coming because the economy is burgeoning, as well as more consumption is happening because the economy is growing fast. And because there are more people who are making money, there is more savings, which wants to come into investment. So there is a demand factor as well as a supply factor. Supply of shares and demand for investments from consumers at a national level.
More companies have more avenues to raise investment and get more capital for growth. And that holistically is great for the industry. Because of course, it takes capital to grow and build companies, right? And now with more avenues beyond venture, PE, and now public markets, right? I think it's just the quantum of overall investment that is increased, and that will be very helpful in terms of shaping industrial growth.
NSE, as it moves forward, should be very conscious about what it did in its first 10 years of operations. How it went about its decision making, how it went about its systems. If you want to stand out, regardless of the fact that you face any competition or not, but if you want to continue to stand out, you have to continue to be transparent and accessible to investors, to brokers, and to the media.
I'm looking to NSE from 94 to 2024, and I wish NSE grow more and more in a more better way for investor education, investor protection, and for growth of the capital market. All should be healthy and wealthy also.
I'm proud that I have been associated with an institution which today is ranked as one of the best in the world in terms of the largest, comparable with any international stock exchange like the New York Stock Exchange